For years, market makers have been using volatility to make money. So they use volatility with future market to trade and to make a lot of money. Billions of billions of dollars actually are made every year using volatility and future markets. So for you and I, it was really hard. Like for meaning you and I, meaning for retail investors, it was hard for us to do that because there was no mechanism. It's very hard. There was no ETF to do such thing until up recently, a couple of years ago. The Simplify came up with a way to just do that and not only make great performance but also to getting annual monthly income. So today I'm going to introduce SVOL, which is Simplify Volatility Premium ETF. So we're going to go a little bit deeper on this ETF so you can see if this is a end of this video, you'll be able to tell if this ETF is suitable for you to invest your money. So we are starting with NAV right now is 22.17, and of course price is 22.20. So it's a pretty close to NAV. This is what you want to see. NAV and price has to be kind of similar, which indicates it's on par to its NAV, which is values. Now on the premium, is not too expensive, it's not too cheap, right? So it's pretty much, I mean, if it's cheaper, the price, if the price is lower, then if the price is lower than the NAV, which is also great, but you don't want to see the NAV way too low and the price is too high, because that way you mean you're buying on premium. So this is a market of today. Of course, it just gained about 0.68, and and then we look at the explanation of the Simplify Volatility Premium ETF seek to provide investment results before fees and expenses. That corresponds to appropriately 1/5 to 3/10 of percent to the inverse of performance of the SVOL Volatility Index, or famous known as VIX, short-term features index, while also seeking to mitigate extremely volatility. In their pitch of saying why they actually created this fund is that we believe many traditional sources of income are failing to meet investors' need in today's low yield environment. SVOL aim to provide an attractive income stream and source of diversification while seeking to avoid risk inherent in other income producing asset classes. The fund, a short VIX position, the fund, which is SVOL, a short VIX position provided investors an optimized exposure for monetizing the premium in the VIX feature market. A modest option overlay budget is then deployed into VIX call options to help protect against adverse move in VIX. In short, it's not a fund that invests in like a stock or anything like that. It just invests in features which use VIX. VIX is, if you don't know about VIX, VIX is actually the measure of the market volatility. Fear, or it's called fear and greed gauge. So how much people are fearing the market and how much people are greedy in the market. When it comes to fund overview, ticker symbol is SVOL. Gross expense ratio is 0.66. Total asset right now is 450, like a 450 million, 450 million. Share outstanding is over 20 million. Distribution yield right now is 16% or 1573, round up to 16%. Distribution frequency, they pay monthly. And when you look when it was incepted, can you do option with this? Actually, say option is available, you can do option with this fund. Inception was May 12, 2021. Management fee, as we've discussed, there are different type of fund fees. This management fee is about 0.5, and there is other expenses 11. Altogether comes to 0.66. So it's pretty good for this fund, where you're getting about 15. You get about almost 16%, but you pay less than 1%, which is a really, really good and low fee. When you look at performance now, we can go monthly, we can go quarterly. So there is annualized. This fund has returned about 10.92, or let's go monthly, has returned about 11.27 since inception. That's the NAV, and market price has returned also 11%. You can see here is a little bit higher because there's also fee included. But when it comes to cumulative, which includes the dividend that they've paid you, has returned about 27%. So this is not really bad. It's a pretty good. It gives you really good return with dividends. Without dividends, has returned only about 11%. So it's pretty much par to with the market. So let's look at portfolio holdings. As I've said, this fund, because first of all, this fund does not hold any type of stock or a bond or anything like that, in terms of like investing directly. So what they do, they take cash, they hold. It's more of a leverage because you can't really buy future market or you cannot buy VIX. So what you do is literally buy short call option on VIX using leverage, and that's what they do, and that's what you can see here. Most of the thing they hold here is a Simplify aggregate bond, and you can see there's a US Treasury, so they use those as a collateral to buy option. When it comes to distribution now, recent distribution, you've seen here it pays monthly, this fund, and of course right now is about 1573 or about 16%. So how much they've been paying when it comes to dividends, we can see the history of dividend here. They start paying since of course we can go longer, but we just look at this year. We can actually go to view distribution history, and we can see longer history here since September 27 2021 they've been paying, and it's been about their, it varies. It started was 25, 34, 39, 36, so it's between 30 to the highest was 36 and 39, 34, 36. So the highest has been 39 so far, but they've been paying between 25, highest 30 to right now this year in 2023 they've been paying 30 cents per share. So that's pretty good. We represent about right now with the price of today, it represent about 16%. So that's not too bad. Now we can look at the chart. Simplify Volatility Premium ETF. We can see that was New York Stock Exchange, and the price was 22. You can see the range here has been between 22 to 52 weeks, has been between 2020 to 23. So it does there's not much fluctuation within these 52 weeks. So it's a pretty good, and you can see max. If we do max chart, we can see it's been kind of going down, with the market, because most of this return, it was at 1.28, and then that was 2021, and it went down, but overall has given you that 27% because of the highest dividend that they pay. That substitute that one. You can see here the it's 16.98, which is 17%, as I've discussed. So that's it. I just want to show you how you can actually use volatility to advantage to make money in the stock market, and also gain receive monthly distribution or dividends. And in doing that, you can use SVOL or Simplify Volatility Premium. If it's your first time and if you like my content, just make sure you subscribe and you like, because on this channel I always bring this type of ETFs. Next video I'm going to make a video comparing SVOL versus Tesla, because both of them use volatility. So I'm going to compare and see which one, if you were to only buy one, it's right for you to pick. So thank you very much for watching. Till meet again. Bye bye.